and welcome to Economy and Markets TV, the show that takes you around the world of economic and financial news. I'm your host, Dave Okenquist, Senior Research Analyst here at Dent Research. As you can see, joining me today is Harry Dent. Harry, welcome.
Nice to be here, Dave.
Yeah, great to have you. Harry, a couple days ago, we got some news that the S&P hit all-time highs. Of course, the Dow wasn't quite there yet, but even bigger news is that as of yesterday, going past yesterday, earlier this week, we are now the longest bull market in history, which surpassed the run from October 1990 to March of 2000. Of course, we know what happened after that. So, Harry, what do you make? We're in history now. So, what are your thoughts on this?
Yeah, that was 3,453 days to be exact. We did that on Tuesday, and that says we're now in uncharted territory. Now, that definition of a bull market is a bull market without a 20% or more correction.
Right.
Our work in demographic and technology cycles, we look at longer term bull markets around these cycles, and that's a 50% plus correction before I say we've seen a long-term bull market peak. The longest in history was 1942 to 1968 with the Bob Hope generation and the auto technologies and electricity, and that was 26 and a half years. Well, this bull market started at the end of 1974, and now we're 44 years way past that. So talk about uncharted territory. And another thing we do in 0 Hour and in the Sale of a Lifetime book, we look at bubbles in depth, especially stock bubbles, but all bubbles. How do you measure? When do they start? The typical stock bubble, out of 7 we measured throughout history, 5 years. Some a little short of the longest one was the tech bubble, which really the bubble phase was late 94 into early 2000.
Right.
This one, if you measure it from the March bottom in massive quantitative easing, 9.5 years and going. And if you measure it most conservatively after the correction around the Euro crisis in late 2011, still 7 years. So this is, as we've been saying, the greatest bubble in modern history. It has been extended beyond anything due to massive quantitative easing, now tax cuts. What it says to you as an investor, when this thing blows, it is going to be massive, more like 29 to 32. Our statistics also show through all 7 bubbles, 42% is the first correction in the first 2 to 3 months, so people get crucified right off the bat. You have to be alert to this, but you have to play the momentum. That's what we do at Dent Research and our investment services. We have things that focus at different risk levels on shorter term plays, playing the momentum, but we're also not tied to buy and hold, which is dead from our point of view for many years. So we can switch quickly to protect you, but you can't be out of this bubble either. And we've got many things. My research shows the latest this is going to last is the end of 2019 on a very important cycle coming up. But this could blow any day now with the Trump political problems, the tariff wars and everything. So we have to be on alert as investors, and we're here to help you through this.
Yeah, absolutely. So, yeah, just looking in history, some of the ones that we've looked at, we've got that one, the 2007 Shanghai bubble. That one only ran for about 2 years. The Nikkei one, that's the famous one. That one was about 5 years. 1929, that was 5 years. As you mentioned, of course, the NASDAQ, that was about 5 years too in 2000, which actually touched on the 1990 to 2000 runs slightly differently. But so near term here, this thing is running out of steam, right? You're saying
it's running out of steam. It could go another year. So that's the thing. That's why we have to keep playing the momentum, but be very alert and quick to change when it switches. And again, Dave, if you look at all these bubbles, not just bull market, but real bubbles,
right.
The downturn to follow is typically 70 to 80%, not even 50%. So you're really talking about sharp and deep when this thing finishes. So this is not something you can buy and hold through. And that's what we try to coach people through.
All right. Well, thanks, Harry. I think that's all the time we have. Thanks for giving us this insight. I'm sure this is on a lot of people's minds, especially, again, about the S&P hitting all-time highs. And now we're in the longest bull market on record. So everyone's, really paying attention to this stuff. So thanks for joining me today and kind of clarifying things for everyone.